go through first that these lessons now will be embedded into your MyPTA account, okay? So when you go on, you'll be able to see, when you're in your program, in your module, you'll be able to see the lesson, and we're also putting the PowerPoint on there. So if you want to listen to me more than once, there you go. You see, you've got access to it. The other thing is, this is the last lesson on Introduction to Bookkeeping, but like I've just said, don't think that I'm just going to leave you there. If you need me, you can email me, call me, whatever you need. The next sessions are going to be the next unit, okay, which I think it's is it bookkeeping controls. Now Helen is going to be doing that one for you, so please keep an eye out. We will be putting the dates on sometime next week, and then we'll start doing that one, okay? So I'm hoping that if we keep this up, then by the time you come to your last exams, you'd be working with us, and we'll have covered everything. Okay, so is there anything at the minute that people are worried about before I get started? I know Angela's just had concern. Because today's plan, what I'm going to do is I'm going to go through the final lesson. We'll only be skimming through this one because a lot of it we've already done when it comes to cash book. But any questions, please stop me, put it into chat. Alan's supporting me, so if there's any questions I miss, Alan will be able to answer it. And then what I've decided to do, it's something that I've not done on these lessons. I'm going to go through an AAT practice exam with you, just to generalize and to basically talk you through what the questions are actually asking you. Okay, so I'm hoping that will help, and then it'll calm some of you down, and then any questions you've got after that, you can fire away. Is that okay with everybody? Oops, if I get right one. Yeah, brilliant. Fantastic. Okay then. So we're going to get started. Yeah, Jenny, don't worry about the exam, yeah? I've got to say it is different to the old standards, obviously, because they've revamped it. But I'm hoping that after today you'll be okay. So just bear with me just for next couple of hours or hour or so. Okay then. So this is just a refresher from what we did last week. Okay. So this is an old style exam question, okay? And you can see here that you've got 9 marks for this very, very simple task. And it's very similar in the new 2022 standards. So it's your knowledge that's going to get you through this exam. And it's RTFQing, reading the flipping question, okay? You've got to read the question. All right, I can't tell you how important that is, and especially with new standards, because as I've gone through it and seen how the examiner's writing it, you've got to be very clear on what it is you're actually reading, okay? Okay then, so discounts allowed daybook. A discounts allowed comes from what? It comes from a customer paying us early, okay? So it's an incentive to keep our cash flow going. Okay, so discounts allowed is either an expense or it could be a liability because discounts received. Okay, so but you need to remember discount allowed is an expense. Okay, and what side of the account do expenses go in? If you use your pills, use your pills. Debit, yeah? So pills, remember, tells you that purchases, expenses and assets are a debit. Receivables or revenues, liabilities and sales are a credit, okay? So I keep going back to this, but in an exam, when you get in, the first thing you should be writing down is pills or dead click, okay? That takes out the thinking of what should happen in the general ledger accounts, all right, or the nominal ledger accounts. Okay, remember, when it comes to posting this then, the net amount would be debited to the discount allowed account. The VAT would be debited, and the total would go where? Yeah, it's a credit. And what's the name of the account? So brilliant, you've got it. It's fantastic. It's your receivables ledger control account. Okay, so that's what you would be crediting. Now in this exam, all you've got is you've got these little like triangles. When you click on that, you've got a list of options. You've just got to pick the right ones, okay? But if you can think about what I've taught you and think about the double entry, it becomes easy, okay? Because straight away, to gain some marks, I'd be putting 5, 10, 85 and 42, okay? It says it's the discounts allowed day book, and you know that the discounts allowed day book should be the net amount. So that's going to be your discount allowed day book. That's going to be a VAT account. So that's going to be your trade receivables control. And if you can remember that discounts allowed is an expense, a debit, you'd be literally going debit, debit. So that one's got to be a credit. Okay, really simple. So think about it on discounts received. Discounts received is basically classed as a receivable. It's more money coming in. So the discount received net amount would be a credit, the VAT would be a credit, and the payables ledger control account would be a debit. Okay. So even if you can only remember a couple of bits, it helps you because you can then work out what the opposite entry would be to the opposite transactions. Okay. Here it's saying sales ledger. That's because it's an old standard question. You might see it as sales ledger or memorandum ledger. But basically, remember that discounts allowed comes from sales, and it's sales that you've sold on credit. Okay, so you know that you've got to make sure that you're using your Jackson Jones as the account name because they're the customer. Okay, and the total amount plus VAT, it says 70 plus VAT, which I worked it out at 84. Okay. And when Jackson Jones bought goods off us, yeah, and we made that sale, he were an asset to us, so he were a debit. So now what we're doing is we're reducing his account because he's paid it. Well, we're offering him this discount. So that means we would credit his account. And if you can remember what I said last time, whatever you do in your control account, whatever side it goes on the same side in this account. Okay? Does that make sense? Are you okay with that? Yeah? Fantastic. Brilliant. I'm just going to click it. Next. Okay then. So, Angela, this is your favourite. This is a cash book. Okay then. So, again, this is an old style exam question, but I want you to get used to being able to read the questions. Oh, if you could see me. Right, at least you're not yawning. You're groaning. That I can cope with that. Okay then. So this is the debit side of the cash book. Okay. So if you can remember what I said when we started looking at cash book, this is money going in. Okay. The cash book is part of the double entry bookkeeping system. So on this one, you've got cash and bank. So the balance brought down tells me that I've got £183 in my cash tin or my till, and I've got 3,220 in my bank account. Okay. It's on debit side, so it's an asset. But we also know that cash can't be a liability. You can't have a brought down on credit side. Okay. Because like I say, you've either got money in your purse or your wallet, or you've got nothing. You never have minus. Okay. So what this is doing is this is basically saying that we've received a remittance advice and we've got a receipt. Okay. Now, a remittance advice is the document that tells us that a credit customer's paying us and what it is they're paying. Okay. So what we're going to do is we'll deal with this first then. So what we've got is you'd use the customer name, Burgess Retail. Okay, it says that it's going to be transferred by backs of £474. Well, if it's going to be transferred, it's got to be transferred into a bank account. You can't transfer it into a petty cash account. Okay, so you're going to put that 474 under bank. Okay, we don't put anything in the VAT account. Okay, because we've already accounted for the VAT and for the sale when we sold the goods on credit to them. What they're doing now is they're paying us for them. Okay, so all you're going to do is you're going to put 474 in your trade receivables account. Okay, and that's, or as it's called, receivables ledger control account. Okay, the next one then, we've got a cash sale. So you can put cash sale, and it says that we've got a check for 1,000 and we've received cash of 326. So your cash goes in your cash column, your check for 1,000 goes in your bank column. But what do we have to do now? Because it's a cash sale, what do we have to do? Fantastic. Brilliant. So we've got to analyse the VAT, and we've also got to enter in the cash sales amount, the net amount. So if I've worked it out right, the VAT on 1,326 is 305. Okay. So the net amount of cash sale would be 1021. Okay. Then what we do is we total up the columns. And what did I say last week about when you're balancing off this? Can you remember? Excellent. Well done, Kathy. Include the balance brought forward, okay? Because students keep forgetting that and they're losing marks on it. So I think it comes to 4694 and 509. Okay then. So just moving on from that, just for a minute, when you come to do your double entry then, yeah, and this is for Angela, yeah, when you come to do your double entry, don't forget your debit entry's been done. So the only thing you've got to do now is your credit entry into your accounts, because it won't balance otherwise, okay? So what you're going to do is you would credit the total of the cash sales, you would credit the receivables ledger control account, and you'll credit the VAT account. And now your transactions have been entered and your books balance. Okay, does that make sense? Use the cash book to help you. Use the fact that it says it's cash side, debit side, money's going in. Yeah? Yeah. So if you've got, make sure you have, if has anybody got a calculator, Andy? So I've got 1,326. That's my total cash. Yeah. Divide that by 6 for me. It might be me. It might be because I've done it off top of my head. Is it 221? Yeah, that's fine. I've calculated it down wrong and put it in wrong. Yeah. Is that better? Brilliant. Yeah, no worries. Well done, you. You can get a Blue Peter badge. Okay. So don't forget your double entry. So if the examiner's asking you to carry it on and post it, yeah, you need to post it to your main ledgers. So these are main ledger or general ledger accounts, okay? Then what you would have to do is, don't forget this one, this Burgess Retail, you would then have to credit their account because they're a customer, they owe us money, and we need to credit their account with 474 to bring down the amount they actually owe, okay? But remember, Burgess Retail is a memorandum account or part of sales ledger, okay? Okay, then moving on to B, then it says the credit side of the cash book shows total cash payments of 342. Using your answer from A, work out the balance. So what you've got is the cash. So it's asking you to look at the cash side. Okay. So your cash side is a total of 509 minus the 342 should give you, just check my calculations today, 167. All right, Al. Look, that's why our Alan's here checking my maths. Yeah? So 509, that's the total. And you see how you could lose marks if you don't bring in that brought forward balance. Minus your 342 gives you 167. So that's the amount of cash balance. Same with bank side. So you've got 4694 bank balance minus your 1743 gives you 2951. Is that right? Please check my calculations. Yeah? Fab. Okay then, everybody okay with that? So you can see why you've got to read the question and you've got to take your time and work out what it is they're actually asking you for. Okay then, let's move on to next slide. So we're just going to quickly go over making payments, okay? Now, the reason why I'm only scooting over this is because obviously we went into detail a lot when we did recording receipts, and this is just the opposite entry, okay? So basically, what we're doing is this is now the payment side of the cash book. So this is the credit side. This is money going out. Okay, so just remember debit in, credit out. And it works for this account and it works for petty cash account. Okay, so what we've done is everything's entered in date order. You've got your details, same as last time. Remember, your cash purchases have got to be analysed. So we've got the total and then we're calculating the VAT and the purchases. We've got the purchase ledger or payables ledger, as we now call it. Yeah. And then you've got other expenses such as wages, rent, Okay. So what you do with this is, because the cash book's been credited, the opposite entries have got to be debited. Okay. So if you can remember pearls, yeah, you know that purchases is a debit. Okay. So your cash purchases have got to be a debit. If your cash purchases are a debit, your VAT's a debit. Your payables ledger control account is a debit, and the reason for that is because we owe these money. Okay, so these are a liability to the business. Now we're paying them, we're crediting the bank account or the cash book, and we're debiting the control account. And then we've got other expenses which are a debit. Now, if you were doing computerized accounts, yeah, you wouldn't just have one account that says other expenses. You'd have one that says rent, you'd have one that says wages, there'd be rent rates, you know, telephone, insurance, you name it. There's thousands of different accounts you can have, but they're still the same. They're all still expenses. So what you've got to think about with this exam is what you're learning manually, you would do the same on a computer, okay? However, the only difference is that you're entering a transaction and it's automatically doing the double entry. Okay, so when you come to look at the exam questions that relate around computerized, bring in your knowledge from your manual bookkeeping, because there's nothing any different. It's just the fact that by having the manual knowledge, you can work out what's happening behind the screen, should you say, because at the end of the day, the computer makes it easy for you. Okay, but we'll look at that in a bit. Okay then, so posting to your accounts, again, remember what I said when it comes to posting it. It's usually the last day of the month in the main ledger account. Now, just be careful with your dates, okay? I've seen a lot of students think that there's only 30 days in months like October that's got 31, okay? Think of what you call it. There's a rhyme, isn't there? 30 days have September, April, June and November. All the rest have 31 except February, which has 28 and 29 on a leap year. Wow, I've had that stored up for about 45 years. So there you go. I'm sharing it. I'm sharing my youth. Okay. But please be careful with dates. Yeah, you do need to learn it. Honestly, Jenny, it's got me through so much in life. It's the only thing that I took from school, but it's a good rhyme to remember. So yeah, please be careful with your dates, because you are marked on dates. Okay then, so there your main ledger. Yeah, you can use your knuckles because it's 30 days of September, April, June and November. Yeah, it's something like you've got January 31, February, not March, April 30, May 31. Yeah, you can do it that way. I still prefer mine. Okay. So they're your main ledger accounts. The next thing you're going to do is then look at your purchase ledger account, your memorandum account. Okay. So this is M. Ahmed. Okay. We've got his purchase day book. So this is what we owe him. Okay. So we've got his invoices. We've got returns credit note, and we've got discounts received. Okay. So if we were to put the payment in that that we've paid, we then bring down, hang on a minute, let me just make sure it's, yeah, we've then got the cash book payment of 29160. Okay. So you look back at what we did earlier. Yeah, we've got 29160. We've paid it out of the credit side of the cash book, and now what we're doing is actually putting it into his account, because it's reducing the liability that we owe. Okay, so if we ignored that, then his account would be higher than our control account. And that's what you've got to think about. If the examiner turns around and says, this is your list of balances from your payables ledger, and this is your payables ledger control account balance, and there's a difference, think about the reasons why. Okay. So if your payables ledger is higher, it could mean you've not put that payment in. Okay. So just read round what it is that the examiner's giving you, the information they're giving you, because there is a lot of clues within that. Okay. Okay, then I just want to talk about contra entries. Okay, or offsetting, I think it's also being called. So a contra entry means that you've got a supplier who is also a customer. Okay, so you're buying stuff from them and you're selling them stuff. Okay, so what happens is when you think about it, it's like I don't know, Lucy lending me £20 and me lending her a tenner. And instead of me giving her 20 to give me a tenner back, we'd contra it. So I would just have to give £10 back because Lucy owed me 10 and I owed her 20. So I just give her £10 back and we don't owe anything. Okay. So it just makes it easier because, especially with businesses, if they, I don't know if there's any businesses now that still send checks out. But if you think about, if I'd have had to send a check out and then wait for a check, it takes a lot of time. So by contraing, it means that we're just balancing off the accounts based on what's owed. Okay. So ASCO Limited is a customer and a supplier. Okay. I've got £600 that they owe me, and I've got £800 that I owe them. Okay. I can't contra £800. All right. You've got to contra the lowest amount. So what I'm doing is I'm contraing the 600. So I'm saying you don't owe me that because I owe you 800. So if we take off the 600, yeah, then all I would owe would be the difference of 200. Okay. Now that happens in real world. Okay. So like if you're doing computerized accounts, for instance, you can do an entry that says that you've received a payment coming in, you've paid a payment going out, and all it does is just balance each other off. So there's no physical money going through anything, it's just balanced each other off. Okay, so that's what I mean by contra entry or set off. Okay, so all you're doing is remember it's got to be the lowest amount. Okay, as much as you'd like to try and write off 800 and 600 are different figures, so you can't do that. Okay, does that make sense? I'm trying to simplify it because sometimes you can read too much into this. Yeah. Okay, fantastic. Okay then, so let's just move on and look what then we have to do in the control account. So again, if you've got a contra, yeah, you've got to make the adjustment in the individual's accounts, but you would also make it in the receivables ledger control account and the payables ledger control account. Okay, so you're crediting one, you're debiting the other to reduce the amount that's actually owed. Okay, remember this, these brought forward figures, these balance brought down, they're all our customers and all our suppliers. We're only contraing Ashco. Okay, so that's why there's still a balance. If you were to balance it off, you still owed money from other customers and you still owe other suppliers. Okay, so don't think, oh, it's contrad, but it don't balance. All you're doing is entering the amounts that contra each other. Okay. Okay then. So petty cash. Okay. Very common question in exam. Okay. It's not rocket science. It literally means small amounts of money. Okay. Because if you've got if you're running a cash book and you're constantly buying first class stamps at, I don't even know how much they are now, the £1 sum at each, and you just go and buy them as you need them, that's a lot of small transactions going through your main cash book. Okay, So what we do is we have a separate cash book called petty cash. And this basically just records money is coming in. Like, so a member of staff, for instance, might say, can I buy a first class stamp off you, and give you money, and you put it in petty cash. Okay. Or you're paying for expenses like window cleaner, things like that. So it's just small amounts. All right. Okay, then. So what we normally do, or what should happen in real world, is somebody might go and buy, like, for instance, here, envelopes and postage, okay, some stamps or whatever. What we'd normally do is say, yeah, bring a receipt, and if they've paid it out of their own money, we'll then reimburse them, okay? Or if they took, say, £5 out at petty cash, I'd expect a receipt back and the change, okay? Because what you're trying to do is you're trying to work out that the amount that you started with and all the receipts and the amount you've got left total up what you should have started with in first place, okay? So if you start in a petty cash tin with £100, you wouldn't have tens of thousands of pounds in a petty cash tin, okay? It's a small amount to buy small things, okay? So if you started with £100, okay, and then through the month you'd got £75 worth of receipts, yeah, you would expect to have £25 still left available in the tin. If there isn't, then that's where either fraud could have took place, or somebody's not brought in a receipt, or it's been recorded incorrectly. There's various reasons, okay? But that's why, as an accountant, we ask for receipts so that we can go through it. Now, in real world, you know, and I can vouch for this, I've got my own accounting practice, got about 50 clients, I think. They're terrible with receipts. Absolutely terrible. But if they then start paying for stuff through the bank, then that's okay, because we can see it on the bank statement. But if they come and say, Sam, you know, I've spent this much in cash on petrol and I've no receipts, I'm like, well, what do you want me to do? You know, they might sign a disclaimer to say they've had it and lost the receipts, but really we should process everything with a receipt. Okay, so in business, we would go in and we'd take a receipt. And I know Emma, who's our accountant here, she won't pay out anything without a receipt. Okay, so she's like a little Rottweiler. So we have to give her receipts if we've been and bought a pint of milk, okay? Because that's the right way to do it. So that's what a voucher looks like. So a petty cash voucher, you don't have to get them pre-numbered. Normally you can just buy a packet of them and you can number them yourself and then attach the voucher to it. But it's just a summary of what's in them receipts, okay? What it is that you've actually paid for. So even if you had a window cleaner and you gave him £2 cash and he don't carry a receipt book, it's always worth doing a petty cash voucher, because you know where it's gone if you were ever questioned about it. Okay. So this is a petty cash book, very similar to your cash book, but we've got more analysis columns here because it's forming part of double entry. Okay, so you could actually just have a petty cash book that would be the double entry system. Okay, so basically what you're doing is with this, and this is important, your receipt is your debit. Okay, your payments, which is this side, is your credit entry. Okay, and this bit in between is basically your information. Okay, so it's not it's not a T account, or it doesn't look like a T because you've got this bit in middle. Okay, you've got this information section here, but it is your debit and credit. Okay, so if I was starting, for instance, with £50 in my petty cash, yeah, on the, what month are we on? On 1st of January 23, yeah, and I could either put, if it's a brought down balance, could put balance brought down, or I could put in there bank, cash from bank, something like that. Okay, so that's telling me I've got £50 in there. Okay, when I start spending, so say on 5th at first, I bought some milk. Yeah, voucher number 001, and I paid £2 for it, and I could put it under admin. Don't worry about that, because I'm buying milk for admin staff. Okay, so this basically then becomes my credit. So what I'm doing then is I'm analysing it out, but at the end of it, we need to then post it to ledger. Okay, because obviously don't forget that postage, admin, cleaning is main ledger account. So we've got to be able to post it. So let's have a look then. So this is a petty cash book. Okay, so I've got my receipts in, I've done my analysis, and I want to balance it off. Okay, and normally you would balance the petty cash maybe every week. Okay, because you could end up with a lot of receipts if you waited till end of month and you might miss something. Now, I have just literally calculated this up in my head, so if I've calculated this wrong, I do apologise. So you've got to calculate each column first, okay? So you've got £20, you've got £15.95, I think I've got £8.10, and then £4.09, okay? Now, oops-a-daisy. Now, what we're doing here is we've then got to balance it off, okay? So the debit side shows that it's got £50 in, and we've put in a further £48.14, okay? So that to me gives me £98.14. So you put that in the debit and the credit column, okay? The difference then at the 7th of November would be your balance carried down. Okay, so basically what you're saying is £98.14 minus off all these should give you a balance carried down of £50. Oh, hang on, that's in the wrong bit there. Your carried down balance will always be on the credit side, okay? Always. And your brought down balance then at the 8th of November would be on your debit side. Okay. That petty cash book is called an impressed system. Okay. And what it's doing is it's starting with £50. You're spending money, so amount's going down, and then whatever you've spent, you're getting from the bank and putting it back up to £50. Okay, so an impress system means that you always start a week or a month or whatever with the same amount of money. And the good thing about that is obviously security, because you don't want loads of money in this petty cash tin. Okay, you want it in bank where it's safe and making a little bit of interest, if any. Okay. If it wasn't an impress system and we hadn't got this £48.14, the balance carried down figure would be 50 minus 360, and then the carried down figure would be the amount that's left over. Okay. So it's very, very simple to do. You just need to take your time when you're completing it. Okay. And if they don't say that you're putting money back into tin to get it up to impress, just put your balance carried down and the amount that's left in. So when you total up your total column, and the balance carried down should equal what you originally started with. Okay. So it's very, very simple. It's just that you've got to take your time. Okay. All right then. So moving on. So this is just the bottom part of the petty cash book, just so I can show you what we're going to do then. So if these are your credit side, yeah, what it means is we've got to do something with the debit side. Okay. So what you're going to do is you're going to debit your VAT account, your postage account, your admin account, your cleaning account. Remember, you're posting the totals. Okay. Don't post individual transactions. AAT might put enough lines for you to do that because they want you to trip up. Okay. But you're better than that. You know not to put individual transactions in. So what you've got is you've got £8.10, you've got £15.95, you've got 20, and you've got £4.09. Okay. Your details is petty cash. And then the date for this one would be 7th of November. I think that's right, yeah. Because that's when we balanced it off and that's when we closed it down. Okay. So that's all you're doing. Normally in exam, if you tested on this, you've got a little arrow and you can post down the details. Okay. But again, it's quite a decent mark question for what you've got to do. So you really need to aim to get the highest marks you possibly can. There might be odd thing that you think, oh, I'm still not getting that, but that shouldn't allow you not to get the rest of the marks from the exam. Okay. There's normally one niggly thing. I know mine was I didn't do level 2. I went straight on and did level 3. But my biggest niggle were the control accounts. I really, really struggled with that. And just as I walked into exam, something just clicked. But it were one thing all through my studying that I really struggled with. So, you know, everybody's got these issues. So don't think you've got to know everything. There's ways around it trying to remember. Okay, then. So this is just like a petty cash control account. It's not very often I've seen these in exam papers, but it basically is what it says. It's controls, excuse me, what's coming in and what's coming out. And all you're doing is adding what you've just done. So you're basically saying that in petty cash, we started with 50, we've put another £48.14 in, balance it off. So the balance carried down and brought down is 50. It's just a summary. Okay, it's a summary of what you've just done. You add 50, you've put another £48.14 in because you'd spent it, and you've took it back up to 50. So you've got a balance brought down on the 8th of £50. Okay. Does that make sense? Yeah? Brilliant. Please, any questions, just ask me. There's no such thing as a stupid question. Yeah, the stupid thing is walking away and thinking, oh, I should have asked Sam that question. All right, so please just ask me. And if I can't answer, the wizard who is called Alan Dawson can. Okay, then. So this is just an example or an exam style question at AQ 2016. Very similar at Q22. Okay. But basically it's just saying how much what will be the entry in the petty cash book to restore the impressed amount. Well, your impressed amount is set 175. The amount you've spent will be that. So it'll be the total of what it is that you've spent. Okay. So I've not got a calculator to add that one bit up. But the amount you've spent, because you're restoring it, you're taking it back up because it's an impress. Would the petty cash book ever automatically form part of the double entry system, or will there always be No, it can be part of double entry. So like if you, for instance, on Sage, when I post, the petty cash book, I post it through the petty cash, and then but it will automatically go to these. So it's not necessarily a control account, but on Sage, you will have a petty cash account, and by putting in and taking out, you literally are, you know, running that petty cash system as like a cash book. So you know, computerized systems are the way, I suppose, that they are the way forward. And it can, like I say, it forms part of the account. So you're putting money in, taking money out, and double entries just automatically being done. Okay, so what will be the entry? So Alan's just totaled it up. Yeah, so details would be one. Is that how much I need, Al? Yeah. Okay, and what I need to do is to restore it. I need to debit the petty cash, and I'll be getting the money from the bank account. Okay, so I need to get the money out of the bank to put it back into the petty cash to take it back up to 175. What will be the entry in the petty cash book to record the closing balance 31st of August after the interest has been restored? Well, what you're going to do is you're going to have balance, closing balance carried down, okay, because it's saying at 31st of August. Don't forget, we'd have brought it down at 1st of September, and it's going to be 175. And because it's the carried down, the closing balance, it would be a credit, okay? The brought down would be the debit. So again, the examiner loves doing this, okay? I'm an examiner and I don't think I'm this cruel, but what they'll do is in a question, they'll say, total your purchases and what side would the carried down be on the purchases account? Well, you'll know purchases as a debit, but that's your brought down, that's a debit. So it would have to be, if it's your carried down, it'd have to be on the credit side. Okay. So when I say about using your knowledge and RTFQing, you need to read the question. Okay. Because it will trip you up if you just read it as thinking, oh, what side's purchases? It's a debit, but they said what side would the carried down figure be in the purchases account, which would be a credit. What will be the total of the VAT column in the petty cash book? Alan, have you totaled it up for me? 6, 10, 13. Oh, thanks. £19.06. Okay, and that would be debited in the VAT account. And the reason it's a debit is because it's being entered in credit side of the petty cash, but it's also an expense to the business. So the business can claim the VAT back as an expense, okay, as a debit entry. Okay, are we okay with that? Because we're now going to move on to the last bit before we start having a look at, yeah, fab. Okay, then. Trial balance. Okay, so when we do accounts, what we have to do is we have to make sure that the accounts balance. Okay, now it don't mean we're going to sit and go through every single account, yeah, to work out what, you know, what's your debits, what's your credits. We're sure that balance is right. What we're going to do is we create what we call a trial balance. And this is basically the start of doing your financial statements. So from your trial balance, we then can do a statement of profit and loss, statement of financial position. So your profit and loss account, statement of profit and loss, basically tells you what's your income, what's your expenses, and what's your profit for year. Okay, so if your income is higher than your expenses, you're going to make a profit. If your expenses are higher than your income, you're going to make a loss. Okay, so it's like, if you think about it, when you get paid, yeah, on whatever date, and all your direct debits come out, after that, you've either got money in or you've got money out. Okay, so you've either doing well and you've got cash there, which is like a profit, or you're in overdraft, which means that you're at a loss. Okay, that's the way to look at it. Okay, so Remember your pearls, or your dead click, whichever you want to do, it don't really matter. But by doing that, you can easily decide which side of the accounts it's going on. So if sales is a credit, sales returns a debit. If purchase is a debit, purchase returns credit. Sales ledger control account's got to be a debit because it's an asset. Purchase ledger control account is a credit because it's a liability. Heat and light office equipment expenses, debit. Vehicle is an asset, debit. Inventory, which is opening stock, is an asset, debit. As long as you've got bank account with money in, that's a debit. Cash will always be a debit. VAT, if it's a liability, it's a credit. If the VAT man owes you money, it's a debit. Bank loan and capital are liabilities. We owe that money out. So we owe money back to the bank and we owe money back to the owner. And drawings is a debit. So if you forget about your drawings and capital, use dead click. Yeah? D, debit, drawings. C, credit, capital. Okay. So don't get confused by it. That's the one I always, yeah. So like I said, the first thing you should do in an exam when you're in there and you're under exam conditions, write pearls, write dead click. Yeah, because if you're getting muddled up with your drawings and your credit, your capital, sorry, it's worked it out for you. It's told you. Okay. So think about all this. Yeah, all these ways of remembering things, just keep storing them. And the more you practice, the more you'll get it. Okay. Okay, then. This is an extract. Could you explain and spell dead? Oh, sorry. Right, dead click. So you've got dead. So you've got the E is an expense. The D. So this is your debit and this is your credit. Yeah. So your drawings, expense, A. Hang on a minute. No. Let me do it again. D, debit, expenses, assets, drawings, credit, liabilities, income, capital. Okay. Does that make sense? Yeah. I just automatically assume that everybody knows what dead click is and that we've got a different spelling for it in accounting words. So yeah, so debit, expenses, assets, drawings, click, credit, liabilities, income, capital. Okay. So if that's the only thing, like I said, that you write down in exam, please do it because it will help. Okay, if it asks you about an extracting trial balance, that means that, I just wanted to show you this, it means that it won't balance. Okay, it's only a snippet at trial balance. So it might be because I don't know, they want you to add something to it or take something away, whatever. When they talk about extract of a trial balance, it's only a part of it. So please don't look at it and think, oh, it don't balance. I don't expect it to. They might turn around and say, your trial balance don't balance in next module, and what would the suspense account be? Because it should always balance, but when you've got an extract, it won't. It's only a partial snippet of it, okay? So don't panic too much. Ignore my question. All right. Are you sure you're okay? Yeah? Yeah, no problem. Okay, then. So moving on then. Accounting equation. So the accounting equation is used when we come to look at things like, I suppose, incomplete records. So that's going to be the next unit, but we need to know about them in this unit. Now, the way that I look at it and I remember it is that, and please don't think I'm an alcoholic, but I remember it as ALC. Assets minus liabilities equals capital. Okay. Now, there's different ways. Once you've learned that, ALC, assets minus liabilities equals capital, you can then work other things out from it. So say for instance, my assets are 50,000, my liabilities are 10. Therefore, that minus that would give me a capital of 40. Okay. In the exam, if I said to you, capital's 40, your assets are 50, you've got to get it to that. What you're going to do. The missing figure would be your liabilities of 10,000. Okay. Assets minus capital equal liabilities. So if I gave you assets of 50,000, yeah, and I gave you capital of 40, by doing that, you can work your liabilities out as 10. Okay. Now, what I do in exam is if they ask you, they could ask you the wordy sides and say which one of these is true. Assets minus liabilities equal capital, capital minus liabilities equals assets, and so on. Okay, so they can make it that one's right and the rest are wrong. Just write it down. Yeah. And if you have to put write it down and put some numbers against it, put some numbers against it, because then it makes it so simple. If you're trying to read something and we don't like reading anyway, without numbers attached to it, just try and make some up just to help you. So then if they said, right, so you've got 50, 10 and 40, if they said like one of the things was capital minus liabilities equals assets, well, 40 minus 10 doesn't equal 50. So we know that's a wrong option, okay? So you've got to somehow learn how to eliminate incorrect answers, or incorrect choices, should I say. Okay, so please think about that as you're going through. Think of me on your shoulder saying, put some figures in. It's easy, put figures in. And they are easy questions to gain marks to. All right, so this is the difference where you're coming in, either you pass your merit or distinction. We want to push you up. I want to challenge you. That's the word of the week, challenger, to get that higher grade, because you've all got the ability. And just on that, I know you've got the ability because some of you, I know you're not my students, but I've marked your work recently, and some of the grades from your assignments have been phenomenal. So I'm so proud because, you know, whether it's me helping you, the books, whatever, your tutor, you've done absolutely amazing. And I am so, so happy that you're understanding it. And if you don't, you ask. Oh, thanks, Kathy. That's lovely. So yeah, it's been really, really warming to mark your work and think, yeah, because I recognise your names obviously from here. So really well done on that, guys. You are really doing well. Okay then, so assets. Assets are something that the business owns or is owed. Okay, so when you're doing computerized accounts, when you look at a nominal ledger, for instance, the top part is all your statement of financial position, which is your balance sheet. So they're all the assets and liabilities and things that the business owns and is owed. And then you move down to your sales, then you move down to your cost of sales, and then you move to your expenses. Okay. So if the examiner asks you to name a financial document that shows what the company owns or is owed or whatever, or the financial state of the business, it's the statement of financial position. And this shows the assets, which are either non-current assets or current assets. Okay. Now, there is a big difference in this. Non-current assets means that they're going to last longer than a year, and the business uses them. Okay, so the business gains use out of it. So things like your motor vehicle, your plant and machinery, yeah, they would be non-current assets because they're going to last longer than a year. So tables, chairs, microphones, backdrops, anything that's going to last longer than a year that the business owns is classed as non-current. Current assets, inventory, which is the closing inventory, cash at bank, petty cash, trade receivables, yeah, they're current assets. And the reason why they're called current is because their value changes regularly. Well, question there, I spelt that. Yeah. So stock, you're selling it all the time. Okay. So it's changing. Your bank account, the amount's changing all the time. Money's coming in, money's going out. Now, listen, it's only the bank account here is only a current asset if it's got money in it. If it's overdrawn, it's a current liability. Okay. So cash at bank means that we've got money in it. Okay, so that's why it's a current. Trade receivables, that's current because it changes every day. You get payments in, you make more sales, da 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 da. Okay? So really, really important that you remember that. Non-current assets are what the business owns. Current assets is what the business is got or is owed. So they will have money in bank, or they should, hopefully. They'll have some petty cash. They'll have some money owed from trade creditors if they sell on credit. Okay. Obviously, if you're a cash business, say you've got say a market stall and you're selling to customers, it's going to be a cash business. So you shouldn't have any trade receivables because you're not going to say to somebody, oh yeah, it's all right, you can take your veg for this weekend and I'll, put it on account. It's not often that happens. Okay. So that's what we mean by current and non-current assets. Liabilities then. So you've again got non-current liabilities, and you've got current. Okay. Current means the amount changes regular and it's got to be paid within 1 year. So it has to be paid within 1 year. And that is things like, I don't know, your VAT. Yeah. You might have some trade payables. Yeah. So your suppliers. HMRC is not going to wait for their money. Okay. Also in there, under current, you could have a bank overdraft. Okay. The bank can ask for that overdraft to be paid back at any time. So if there's no money in and they're using the bank overdraft, then that's a current liability. Oh, I've got that there. Loans, yeah, as long as the long term. So if it's going to be paid back over, say, 5 years, it'd be a non-current liability. If it's going to be paid back in 12 months, it'll become a current liability. Okay. So there's a lot of people when we went into lockdown, there were a lot of businesses that were given help to basically to survive, and they were given help by the government, and they were called bounce back loans. So a lot of companies have got the bounce back loans to pay back because unfortunately the government's going to need the money, so you've got to pay it back. So there's a lot of businesses that you might see that if you do their accounts or look at the accounts on Companies House or whatever, that have got these bounce back loans. Okay. So if it's going to be paid back after a year, it's non-current. If it's going to be paid back within the year, it's current. Okay. Capital then is money that's been invested by the owner. Now, again, be very careful with this because they might turn around to you in exam and say, owner's put £5,000 into business bank account from his own personal funds. So you debit business bank account, you credit your capital. The owner bought a delivery van for £2,000 and used the money to pay for it. A lot of students then go and credit the capital account again. No, you're not. You're debiting the motor vehicle account and you're crediting the bank account because he's put the money into the business. It's coming out of the business account. Okay. So you would only ever, you're crediting the capital account because the owner's putting money in. Okay. Later on in your studies, you'll see what happens when it comes out. But all you've got to worry about is that any money the owner puts in will be a credit because it's capital. Okay. Okay, then. So quickly, just put AL or ALC. So we're going to go down them. So I just want you to put what you'd put it under. So a building. The company owns a building. A, brilliant. Sales ledger control account. This is your money that you owed from your customers. Asset, liability, or credit. Yep, asset, brilliant. Purchase ledger control account then. Is it an asset, a liability, or credit? A capital, sorry. Liability, brilliant. Inventory, so this is your stock that the business owns. Brilliant. Money at the bank. Excellent. Petty cash. There's only one answer for this. Fantastic. About a motor vehicle. God, you lot are good. Careful on this one. Money that we owe to HMRC for VAT. Hey, fantastic. Money invested by the owner into business. Fab. Fixtures and fittings. So this can be like your tables, chairs, things like that. Excellent. And a bank loan. Oh, brilliant. Well done, guys. Absolutely fantastic. I'm so glad you're still all awake and you've got it. Okay. Right, the next thing we need to look at. Oh, I didn't know I'd put all ticks. Hey, it's a good job I got them right, isn't it? Put ticks in there, I didn't even know. Okay, then. Capital or revenue. Okay. So, there's two parts to this. So, what we've got is capital expenditure means that the business has bought something to use within the business, okay? And it's going to last longer than a year. So, for instance, if you are a gardener, okay, and you've just bought a new sit-on lawnmower, you'd expect it to last longer than a year. Okay, so this is an investment you're making into the business. So that's why we call it capital expenditure. Okay, the asset's going to last because it's going to be a non-current asset. It's going to last longer than a year, and we're investing into the business. So it becomes capital expenditure. Okay, now the reason we have to break it down is because when we do the profit and loss account, if you paid £50,000 for this lawnmower and you put it through as an expense, it's going to have a dramatic effect on your profit. Yes, you're not going to have to probably not pay tax, but you've accounted for it incorrectly because it's not an expense to the business. It's going to generate the business more income. Okay, so really important that you understand the differences. Revenue expenditure means it's day-to-day costs of running a business. So wages, light, heat, I don't know, telephone, rent, rates, insurance, whatever. Anything that it costs you to run the business regularly is revenue expenditure. Okay. The next one then is capital income. So this is where businesses have got it might be things like, say you've got surplus office equipment like tables, chairs, filing cabinets. A business might sell them to generate some cash. Okay, So money that the business is getting from selling assets, non-current assets, is classed as capital income. It's only classed as that because you're selling items that belong to the business. Okay. So the last one then has got to be revenue income. This is your day-to-day revenue. So if you're a mobile phone shop, selling the mobile phones is your revenue income. If you've got an office that you let out within your shop, that's revenue income. Okay, it's what you do on a day-to-day basis that generates income. All right. Capital income is like a one-off thing. It doesn't happen very often. Same as capital expenditure. Spending £50,000 on a sit-on lawnmower, for instance, is not something you do regular. Okay. So they're the differences. So really think about that as we start going on. Okay then. So here's an old style exam question. I've seen similar questions in the new Q22. So this is a knowledge thing. So assets, liabilities, capital. You've got to decide from here which is an asset and which is a liability. And once you've worked that out, you can work the capital. Okay. So if your premises are an asset, loan from bank is a liability, cash at bank is an asset, furniture and fittings, asset, money that we owe to credit suppliers is a liability, and money that customers owe us is an asset. Okay. So if I've done my calculations correctly, yeah, 153049. My liabilities are 67396. So assets minus liabilities equals capital. So capital should be 85653. Okay. So if you're a bookkeeper, for instance, and you've got a client that comes to you and says, I've just started my business. This is everything I don't know how much I've invested in it, but this is what I've bought. Yeah. And this is what I owe. You can then work out the capital. So you can work out then what they've invested in that business. Okay. All right then. So purchased a motor vehicle, a delivery van. Yeah. What would we class that as? You can just put either CECIRERI, whatever. Brilliant. Capital expenditure. Fantastic. We've purchased some stationery that we're going to use in business on a regular basis. Excellent. We've purchased train tickets for business travel. So it's day-to-day expenditure. Yeah, fantastic. Cash received for sale of goods. So this is as mobile phones that we've sold. Brilliant. Revenue income. And what the owner's done is is put some more capital into the business. So what's that? Fantastic. Capital income. Well done. Absolutely brilliant. You should be well proud of yourselves. Hang on, I'm just dropping my book. Okay then, another way that they can show it is just by, you have to tick. Okay, so amount invested by owner, capital income, receipt for spare office space, revenue income, payment for a courier for a delivery service, revenue expenditure, and we bought a van, capital expenditure. So it's just different ways that they can word it or show you. Okay. Right then. Any questions before we go on to just have a quick look through this practice assessment? Are you all still awake and got a drink? Okay, just. Oh, cheers, David. Yeah, brill. Okay, Right then, I'm not going to go into a lot of detail on this because this is something that you'll be able to, I want you to try when you've done your practice assessment, our practice assessment. So you should, after today, be able to do assignment 3, and then you should have, I think you've got 2 practice assessments for introduction to bookkeeping. Okay, so I just want to be able to talk you through what an exam looks like and what you've got to be careful of. Okay, so we'll might be about half an hour on this, if that. Okay, do you know how we right? So in your exam, yeah, can you see you've got marks? Okay, so to pass an exam, and it's same with our marking, you've got to pass at 70%. So 70 to 79 is a pass. 80 to 89 is a merit. 90 to 100 is a distinction. Okay. So basically what they're saying is there's some questions that are so easy to get marks. If you lose them marks, it's crazy. Okay. Then there is some questions where you can see the marks, so you've got to probably put a bit more time into it. Now, I would suggest to anybody, the exam is an hour and a half long. Okay, it is plenty of time. It doesn't sound a lot, but once you've done some practice and that, it is plenty of time. But what I would suggest is, if you have got time left over, I'm a big believer in gut instinct. Okay, and if you've put an answer there, it's because you've thought of it and that's what's come to you. So be very careful when you do go back over it, if you've got spare time, not to just put yourself in panic mode and then start changing everything. Okay, because that then can be difference between a pass and a fail. So when you sit your exam, and I'm telling you all this now live, you do not book in for your exam until you've done all our assignments, our practice assessments, and you've seen that you've passed. Okay. Please, please, please do not book in for them any earlier, because we want to get you ready to be able to pass. And if you've done all our assignments and our practice assessments and the AAT practice assessments, you'll pass. Okay. But if you just think, oh, I've listened to Sam for an hour and a half and I'm going to go and sit my exam because I feel confident, please don't. This is only to back up what you need to practice in your books and by doing our assignments. Okay. Because you'll set yourself up to fail if you don't do our assignments. Are the past papers available? No. You've got 2 practice assessments on the AAT. I wouldn't suggest you go and try and log in and get AQ 2016. All I've done today is just showed you, but we've got 2 practice papers for you. You've got AAT ones. We have got some additional resources that we can send you if you do need extra assessments. But I also, when I'm marking the practice assessments, if I feel that you could do with a little bit more practice, I will put a couple more papers on with model answers attached so that you can work through them as well. Okay, so you've got plenty of practice. There's no reason why you can't pass it. Okay. Alan, there are 2 AAT practice assessments for you for this unit, 2 Premier Training ones and additional ones. So like I said, Alan's backed me up. I'm not just making it up as I go along. We have got plenty to help you get ready, as long as you do the work and you don't rush. Okay. Are there any long questions where you have to do a lot of writing? Not in this unit. There is written tasks, but mainly at level 3 and 4. So what I'm going to show you now, I'm going to show you a full paper. Okay. So this is a practice assessment off the AAT. Not going to go into a lot of detail. We're going to work through it, and but now I'm not going to bother. I think we'll just touch on it. So the first question for 4 marks, it says, what is the document? So basically here, I can't open these at minute. You've got a drop down list, okay? So it says it summarises the income and expenditures, income and expenses, and reports performance in an accounting period. Okay. So what I've just said to you is income less expenses gives you profit. Okay. So that would be like your statement of profit or loss. And because it's in this drop down, you should be able to identify it. It checks the double entry system. It makes sure it's equal to each other. Well, we've just seen that document's a trial balance because I've just shown you one. Yeah, fantastic, Alicia. Summarizes the assets, liabilities, and capital. Okay, so I've just said the statement of financial position shows the assets is what the company owns or is owed, the liabilities of what we owe out, and then the capital of how the company's being financed. So that's your statement of financial position. And it says to remind customers of the amounts outstanding and request a payment. Well, that's got to be a statement of account because you're going to send it to a customer to remind them how much they owe. Okay, and to give them a bit of a shove to say, excuse me, can you now pay? Okay, 4 marks for that. 4. Okay, even if you're guessing at a couple, you've still got chance of gaining 2 marks, 50%. Never, ever, ever leave a question without an option in it. All right. Take a guess. If you're stressed out and you're thinking, oh, I can't do it, take a guess and move on. Okay. Then the next one's about coding. Now, I don't know why students get this so confused with it. So basically what it's saying here is that we want you to code brown shirts and red waistcoats, okay? And it's saying that they want you to use the first 2 letters of the product colour, the first 2 letters then of the product type, and the next sequential number. Now, to me, that's really not hard. So the first 2 letters of the product colour, the first 2 letters of the product, plus the next number. Well, if that number's 106, next number's got to be 107. Okay, so it'd be BRSH 107. Red waistcoats, REWA 108. Okay, crazy. 2 marks for that, just for putting in some letters and a couple of numbers. But why students make, hard work of that, I really don't know. But again, I know people get under pressure, but they're the marks that you should be getting, okay? They're the ones that should be building your confidence up to move along with next questions. Identify whether each of the following statements regarding manual bookkeeping is true or false. So it says a petty cash book is always a book of prime entry, but never part of double entry bookkeeping. Oh, we've just had this conversation. Well, that's false, okay? Because it can be part of double entry. A cash book is not part of the double entry bookkeeping system if there is a bank account in the general ledger. Well, that's true, because if you're not using a cash book, and you're using a petty cash account and a bank account, then it's 2 separate. Okay. And then this bottom one, you've got complete the following statement about digital bookkeeping systems. So this is about computerized accounts. And really, if you think about it, it's quite simple. So it says digital bookkeeping systems, and then you've got choices. And then you pick one, and then but will not something. Okay. It's like blankety blank. Okay. The answer to that one is digital bookkeeping systems will reduce errors, but will not stop duplication. Okay. So it will, by just entering in a sales invoice and it doing all double entry for itself, it will reduce the number of errors, the human errors, because we're not debiting and crediting. yeah? But it doesn't stop us as humans putting it on twice, okay? So we might duplicate things, but we'd know that when we come to do as reconciliations, okay? This one is basically just what we've gone through. So it says classify it, and this is about assets or liabilities or capital or whatever. So you've got plant and machinery. In the answer, it's an asset. Wages and salaries is an expense. Loan from bank is a liability. Commissions received is income. Okay, so if you're receiving the money in, like rent received, commissions received, that's a credit. Okay, it's income. Assets accounts is 159772. The capital account shows 100652. Assets minus liabilities equals capital. So assets minus capital will equal liabilities. Okay, simple, really simple calculation. Again, you should be gaining full marks. Okay, this one, now this is the one that I suppose you've got to think about. It says, what's the dual effect? So that means what's the two effects that's going to happen. So if, for instance, I lent my daughter £10, yeah, I'm going to decrease my cash and I'm going to increase my asset because she owes me £10. Okay? That's what I mean by dual. What's the two effects that take place? So this one, purchased a motor vehicle on credit. Well, you know a motor vehicle is what? An asset, okay? So if you've bought something, it's going to increase that asset, yeah, because you've bought a motor vehicle, but you've paid for it on credit. Now, if you're paying for it on credit, that means you owe somebody. So it's going to increase your liability. Okay. So it should say here, increase both an asset and a liability, because your assets are going up, but also your liability is going up because you owe for it. Okay. Does that make sense? Yeah. Brilliant. Okay, let's look at next one then. We've repaid a loan in cash. So cash is an asset. The loan was a liability. Your assets have gone down and now your liabilities have gone down. So you've decreased both the asset and the liability. Okay? Is it making sense? Some of you've gone really quiet. Yeah? Brilliant. Okay then, so we've sold surplus office equipment for cash. Okay? So as cash has increased because we've sold some, but what's happened is our assets have got to have decreased because we've got rid of stuff. Okay? So we've got an increase in office equipment and a decrease in cash, and they're both assets. So we've got a decrease and an increase in asset. Okay. Received a bank deposit from owner. So as bank accounts gone up as asset account, but also as liabilities gone up because we owe the owner the credit. So both asset and capital have both increased. Paid a credit supplier using bank overdraft. Oh, this is a sneaky one. Okay, so your bank's overdrawn. So your bank is a liability because it's overdrawn. So your liabilities have increased. Okay, but we've paid a supplier, a credit supplier. So your liabilities have also decreased. Okay, so you've got an increase and a decrease of your liability. Okay, and by breaking it down, and I know I don't want to make it sound patronizing or whatever, but you know, if you talk yourself through it in your head, obviously, because in exam you can't talk, but I constantly talk myself through things, you know what I mean? And that then makes sense to me. While ever you're just trying to read it, you're thinking, oh, break it down. What is it telling us? And then answer it. Okay. Don't read it as a full thing. Read it, then break it into your two things. What's happened? Okay. And that's the way you're then going to gain how many marks? 5 marks for that one. Okay. And all you're doing with these is you drag and drop. Okay. So you just pick it up and move it. So it literally takes seconds. You're not even typing anything in. Okay. All right then. So moving on from that, this one's straightforward. We've been through these. So all you're doing is you're calculating the amount before discount. Okay, but what discount's that? What discount are they talking about there? What's the one that we use before we start doing the invoice? Brilliant. So it's this. Yeah? So you're working out the total amount first, then you're working out what the 3% discount is. Then that you've got the amount after the discount, and then you work out your VAT and your total. Really, really simple for 5 marks. Okay? So it's just remembering it's the bulk discount that you take off, and then you work it out from there. Okay, again, this one, if you can't remember, just guess. Yeah, so this is 1 mark and it's asking you which day book it is. Okay, if you're quite savvy, yeah, look at what it says. It says customer. So it's got to be something to do with customers. Well, we know purchasers is not. It doesn't say that it's a discounts allowed day book, so it's got to be a sales day book. Okay? And remember, we're working out discounts for them, so we're giving them discounts cost of the customer. Then all you're doing is you're putting in your total. So your total is your highest figure because it includes VAT. You've got your VAT amount, your net amount, and then you're putting it under the correct code column. Okay, and that comes from here. Okay, so you've got to work it out based on the information the examiner's given you. They're not trying to trip you up. They're not trying to trick you. The information will be there. Okay, if they asked you to put a customer reference in, it's there. Everything's there for you. Okay. Task 4 then. Okay, so what's this task asking? It's basically saying that we've received a check, so it's your cash book and relates to invoices and a credit note. And then it says complete the following statement about the accuracy of the amount received, and you've got to decide whether they've overpaid, underpaid, or whatever. Okay, so what have we got here? Let me just make sure I'm on the same task. This one's 10 marks. 10. Yeah. So what you're doing is you will pick what the answer is going to be. So it says here, Print PLC has overpaid the amount owing, so a refund should be offered. Okay. So basically, what you're saying is this is the amount. Yeah. You've got the invoices. You've got a credit note. Yeah. Credit note, invoice. That plus that minus that doesn't equal that. So they've paid too much. Okay. And because, they've overpaid, we'd offer them the money back. We'd give them a refund. Unless they were putting another order in and we could write it off against that order. Okay. Then it says, calculate the amount that should be paid by the end of the week. It says Chase PLC is offered 2% discount, yeah, for payments of invoices that are paid by the end of the week. Okay, so what date is it? Is it saying, so it's saying that Amount to be paid by end of week. So you take off 2% of each one. Okay. So 1325 minus 2% would be, 1590 minus 2% will give you 155820. So they want to know that you know that if you take off 2% of each one of them, the amount that you're going to be paying at the end of the week. Okay. Then here you've got it, they've given you a remittance advice, which has got invoice numbers in and a total. Okay. Company policy is to allocate any underpayment as a part payment and to query any overpayment. Okay. So basically what they're saying is what are you going to do with those transactions? So it's saying that it's paid 161080. Invoice number 14650 59 and 62. Okay. So you've got an opening balance of 44760. Okay. Which is them two added together. Okay. So you're going to allocate in full. Invoice number 1059 is, and you have to be careful with this, 47440. They've got here 477.40. So you're going to part allocate. Yeah. Invoice number 1062 is 68880. I've got 1062, yeah. 1062. 68880. But then you've also got a credit note. Okay. So 68880 would be the amount less the credit note. Okay. So you're going to allocate in full. Allocate in full. So just be careful of that, okay? So you're not part allocating this. It's because it says it's a credit note. And one minus the other gives you the correct figure. Don't get last two. Okay. What? 1062 on this credit note. Okay. So balance brought forward. Let me go from beginning. Balance brought forward is these two. Okay. So we're going to pay that and allocate in full. Invoice number 1059 is 47440. But on here, they've got 47740. So we're only going to allocate the 44740. So it's a part allocation. Yeah. This one, we've got an invoice number of 1062 and a credit note of 121. 83880 minus 150 equals what we've got on the remittance advice, 68880. So we're allocating those two in full because it equals the 688, is it? Yeah, 68880. Okay. So you're taking off the credit note against that invoice to allocate the full amount. Okay. Laura, are you okay with that? Yeah? Brilliant. So remember, if you've got credit notes on your system, you need to allocate them against an invoice, because if you don't, you're going to keep paying invoices and you're going to have all these credit notes and you're going to end up with like a credit balancing accounts, where what you have to do is, in real world, if you've got a credit note against, say, a certain invoice, yeah, you'd allocate it against that and you'd pay the difference. Okay. Really important that you understand that and you do that. Then we've got task 5. So another 10 marker. This one's basically saying that you're processing a supplier invoice or a credit note. Yeah, but it's come from a supplier. So then it says The supplier invoice below has been checked and authorised. Which day book are you going to post it to? Well, because it's a supplier invoice, it's got to be purchaser's day book. If it said a supplier credit note, it'd be purchase returns day book. Okay? So use the wording within the questions to help you. We're not trying to trip you up. Okay? We're just guiding you. But you read it wrong and you rush it, you're gonna lose valuable marks. Okay, so the next part of that task is then to identify any transactions. So it's asking you then to tell me what information you'd put in this digital bookkeeping system. So when you're using Sage, for instance, all your accounts, your customers, your suppliers have all got a unique account number. Okay. Well, it says on this one, the supplier account code is BIF32 and the general ledger code that they post it to is 5032. Well, I know because I work on these types of accounts that a 5,000 code is a cost of sale. So it's an expense, but it's something that they need to be able to produce what it is they're doing. Okay. So what you're doing is just putting the supplier code in as BIF32, whatever it were, and the general ledger code in as 5032. And I don't mean to be funny, straight away you've got some marks for that. Okay. The invoice number comes from here. Okay. It is that task, isn't it? Yeah. 3239. Again, you've just got yourself a mark. And then you've got your net amount in. Yeah. So the net that you're paying is this. And we're putting the net amount into their account because VAT is not our money. It goes to a VAT account. Okay. So the net amount is 37125. And it's a purchase day book, so that's going to purchaser's account. And VAT is, you'll have different ones, it's 20%. Okay, easy. Then it says identify 4 discrepancies. So all you're doing is they're telling you what to look for. It's quantity supplied, right? Well, yeah, we know that it's 80. What about the product supplied? Well, it says cable fittings type. But no, it's got a different code. So we know that's wrong. Okay. Data invoice, it's data invoice, right? Well, no, because purchase order, 23rd of May, you can't invoice before you get a purchase order. So just take your time with it. It's so simple. All right. You're just checking documents. And that really should be an easy 10-mark question for you all to get. Okay. Next one then is basically saying what date would you have to pay to get the discount. Okay, so it says here invoice date at 15th of May for 7,950 including VAT. Supplier terms are 30 days net, 1% if discount if paid within 20 days, 2% if paid within 10. Identify the date by which the supplier should receive payment if no discounts taken. Well, it says that it's 30 days. So 30 on to 15th of May. I know it's something like 45 days. Yeah. You just have to then work out end at month. So there's 31 days in May. Yeah. So it's got to be 14th of June. Okay. Because your 15th of May to 31st is 16 days. And then you've got to work out the rest. Yeah? Simples, I think. Okay. Then it says, identify the amount paid and the date to get the discount. So basically you're saying 9,750 minus 1% means that I could pay 9,652.50 but it'd have to be by 4th of June. Okay. If I wanted 10 days, 10 days onto 15th of May is then the 25th of May. If I wanted to take that discount, it would be 9,750 minus 2% to give me 955,500. Okay. Again, another 10-mark question. Okay. So once you've done that, it then asks you to identify, this is a statement of account received from another supplier. So we've received this. The statement of account shows the amount outstanding of 8782. The amount does not include 2 checks dated 29th and 31st of May, which were received by the supplier. Okay, so you've got a check here and a check here. The first thing I would do with this is I need to work out, it says identify which 4 amounts were included in these 2 checks. Okay, so start at top, 1968 minus 345, I believe gives me 1623. So those 2 equal 1623, which is check number 0106009. Okay. The next one says 818. Well, it can't be invoice 3201. It can't be 3238. Could be then 326. It can't be 2427 because there's no more credit notes on there. So 326 plus 492 equals 818. So they're the 4 items that relate to those 2 checks. Okay? Does that make sense? $30 days net means that it's based on a 30-day account. Okay? Is that right, Alan? Because I always get confused with this. So 30 days net means that, yeah, it's 30 days. Okay. Then it says calculate the amount that should be paid to settle the remaining balance. Well, that's paid and that's paid. So the amount that needs to be paid would be that, plus that, plus that, plus that. Okay, which I believe totaled, and I did total this up, 6341. Okay, 10 marks. 10 marks for that task. Yeah, and all it means is that you just got to spend a little bit of time just reading and working out which ones have been paid and which ones haven't. Are we okay to scribble on it? Show workings. Well, you won't be able to scribble on it, will you? Because it's on screen. Everything's done on screen. But you can have scrap paper in exam. So you just ask your exam centre for some scrap paper and they will give you some. You know what I mean? But obviously, because everything's on screen, you will be. Please don't scribble on screen because you will be in trouble. I wish it were like mine, but it's not. Okay, then. And then you've got one that relates to. Oops. So this one is again cash book. Okay. So it's asking you what your general ledger codes are, your net amounts, your VAT, and so on. Okay, so you've got let's have a look. Has it given me anything? So it's given me a receipt number. Okay, and then you've got general ledger codes. So from here you'll get different codes. So as long as you know that one is for training and that one would be refreshments. So as long as you pick a code that relates to that, there's no point picking college fees for students enrolled on payroll course and putting it to motor expenses. Okay, so you've got to think about it. Sorry if this is a daft question, no daft questions, but will the codes be the same as what I use on Sage? No. No, use the codes that are in the exam. Okay, because they might have just made them up. Okay, because I know that I think it's 7916 is definitely not refreshments on Sage. But you don't need to remember, they're in the question. Okay, they're not trying to trip you up, Flower. When you click on that little thingy there, that triangle, they're there, and it'll make sense to you as long as you read the receipt. Don't just, guess it. Then you're putting in the net amounts, and then you're putting in what VAT code it is. And we put the net amounts in because obviously on a computerized system, because you set it up saying that you've VAT registered, it automatically calculates the VAT. Okay. And then it's just saying calculate the bank balance. So it says at the end of the month, you've got a debit in cash book of 13,726.55, and you've got credit of 5,15299.12. Calculate the balance. If it's overdrawn, use a minus. It is overdrawn because your credit side is higher than your debit side, so you're going to know that it's overdrawn. So you'll put in, make sure you put, if it says use a minus sign, you put a minus in. Otherwise, you might have the right answer, but you're not going to get the mark because you've not put a minus in. We're thinking it's a positive. Okay. This one then is a bit tricky, actually. I was reading this earlier and I thought, that just don't make sense. That don't make sense. And because I'm like any other accountant, I'll only read the bit that I think's interesting. And for some reason, I stopped reading here and then didn't see this bit here. And I'm thinking that don't make any sense, that. None at all. So basically what all this question is saying that you've got £200 in your petty cash and at end of month you had £12.88. Yeah? You then go and withdraw £200 every month. So then you're adding on 200, and then it says here you've paid out during the month 18742. And it just says what's the closing balance. But if you don't read it all, you can't find that closing balance because information's there. All right. And I've done that. I did it last night when I were going through this, and then I did it again this morning. So even though I've got like hundreds of years, I think, of accounting knowledge, I still don't like reading. So, but you've got to, otherwise you're going to get it wrong. And all it's saying is that the balance carried down in the account would be £25.46, and it would be a credit. And because it's saying the closing balance at the 30th of September. If I said to you what's the balance at the 1st of October, you'd have put balance brought down 25.46 debit. But it's saying at end of month and it's 30th. All right. Does that make sense? You're all going to read the question, aren't you? You're not going to do what Sam's done. Not yet. Selma, talk to me. You're not going away until you understand. Closing balance is the same as carried down. Yeah, absolutely it is. Yeah. So, Selma, I'm going to just talk through it again. Yeah. So what I've done is I start my petty cash with £200 in bank. Yeah. So let's just go 1st of January to save my head. 1st of January 23. Okay, I started with £200 in my petty cash. At 31st of January, yeah, I'd only got £12.88 in. And what I do is on the 1st of every month, I get £200 out of the bank. So then I've gone and got another £200 out at bank. So on 1st of February, I've got £212.88. Okay. It tells me that during the month, so during the month of February, I paid out £187.42. So the difference between 21288 and 18742 is £25.46. So that's what I'd got left in my account, in my petty cash in February. Okay. Now, so what I'm saying is if I'd got a T account here, right, and I'm going to show you this, yeah, this is the easiest way to think about it if you're struggling. So you'd got balance brought down at 200, that what in, yeah. You paid out whatever you paid out, which is difference between that and that, 212.88. What's difference in that? Can somebody calculate that for me? So £200 minus £12.88 gives me 187.12. Oh, yeah. So if I balanced it off at the end of January, oops, it is. I'm saying I would have had £12.88 as a balance carried down, but I'd have brought it down onto this side to start on the 1st of February. Okay? So on 1st of February, I've got a balance brought down of 1288. I've drawn out another 200 and I've spent 187.42. 212.88, 212.88. The difference then at the 30th of September, it says, is the balance carried down, which is £25.46. And he specifically said the end of the month. Okay? So you would have a balance carried down of £25.46 as a credit. If he said on the 1st of October, it would be balance brought down £25.46 debit, because you'd bring it down under here. Okay? So if you have to draw a T account and enter the figures in to work it out, do so. You've got enough time. Okay? Does that make sense? But that's 6 marks. You know what I mean? For just that task. Use your T accounts. Don't think you've got to go into exam and just have it all up here. Because even now when I'm doing clients' accounts, if something out of an ordinary happens, I do my T accounts. Yeah? Brilliant. If it doesn't, you get in touch with me, okay? If you're working on a questioning assignment, for instance, yeah, and you get stuck, let me know. Okay, then it's just saying complete the entry for petty cash. Okay, so you've got £27.30, and it says plus VAT. So your 27.30 is net, then you work out your VAT, and then you work out your total. Okay, that makes sense. Why I'm impressed with you a lot. Okay, right, this one then. Sorry, yeah, no problem, Laura. We'll get this sent over to you anyway. There's only this one and one more task, and then I'm done. Okay, so task 9 is basically saying what would you do to put a recurring entry in. Where a recurring entry means in Sage, for instance, that you put in an entry in and it's going to continue for 6 months, 12 months, or whatever. But what you do is you set it up so the computer automatically does it for you. So you know when we're doing bank reconciliations at work and that, if you've got rent coming out every month, you can just set it up on Sage and it automatically does it. Now, the one thing I've noticed about this, yeah, so it's saying here, set up the recurring entry. Well, the details will be whatever it says, motor insurance, yeah? And you've got a drop-down box here and you just pick the one. It says that it's going to start on 15th of October. it says that it's going to come out in equal installments, okay? And you've got to then work out. So what it's going to do, it's going to be paid monthly. So the frequency is monthly. And this is the bit that people tend to put stupid figures in. Recurrences means how many times is it going to recur? Well, to work it out, 1512 divided by 252 gives me 6. So it's going to be over 6 months. And the amount's going to be 252 and it's exempt. 6 marks for that. And this next bit, it's just, you know, there's easy marks to be had. Okay. On this next one, this threw me because I thought this is far too simple. So it's 1st of October on that question. So it's saying process one recurring entry by clicking on a box alongside the appropriate amount. Well, the next recurring entry is going to be first, so you just tick on that. Yeah, because it's saying that it's going to recur on 2nd of October, so you choose that one first. All right. If that had have said, I don't know, 30th of September, then it's gone because we're basing it after. So it's the first one that comes after. Okay, nearly done. This one is just what we've been through, your double entry, which I've shown you earlier as well. So your sales returns account is your net amount, your VAT, and you've got your total, which is your receivables ledger. So if you know sales is a credit, you know sales returns is got to be a debit. VAT's got to be a debit, and receivable ledger's got to be a credit. Okay? So again, very, very simple. Identify the ledger in which the credit note will be entered. So it says discounts received. All the amounts have been transferred to general ledger, so main ledger accounts are done, but you've got to do something in Pell Limited. Okay, £62 plus VAT. Well, it's discounts received, so it's got to be a payable, because trade payable. You've got to put in Pell Limited, and the amount is 62 plus VAT, so it's 74.40. And in their account, it'll be a debit because we owe them the money. They were a liability, and now they've given us some discount. So that's, again, a very, very simple question. Task 11. Again, all you're doing is, with this one, I don't know why I saw these grey things and thought I needed to put something in, but all it's basically saying is that this task is about totaling and balancing accounts. It's a supplier account. So if I were to put, I know that's got to be some kind of either balance brought down or an invoice, and that's got to be some kind of credit note, and that might be an invoice. Okay. And it says, identify the entry required to record the closing balance at 31st of October. So total the highest side minus the credit note would give me the balance of 6379, and it's asking for the closing balance at the 31st of October. Well, we're working in October, so that must be that it's a carried down figure of 6379, which means that would be on the debit side. Okay, because to bring it down, it'd be brought down on the credit side. Calculate the total amount that will be entered in each debit and credit column after balancing off the account. Okay, so basically what we're saying is that where's my calculations? Let's have a look. So calculate the amount that will be entered in each debit and credit column after the closing balance. Okay. Has that moved on? So you've got, which is basically, you've got 6379, and then you've got, so what you're doing is you're totaling up your highest side. So basically this is your 6523, and you have to put that on both sides in order to calculate your carried down figure. And that's all that it's asking, but it makes, you know, when you read it, it makes it sound really complicated. So all it's saying is what's the total that you'd put on debit and credit side? Well, you'll know when you're balancing off an account, it's got to be the same total there. And it's the total of the highest side. So it'd be 6523. Okay. And then it's just asking you on this one, the following two accounts are in the general ledger at the close at 31st of October. And then it says identify, and this is the good bit, opening balance at 1st of November. So that's your balance brought down at 1st of November. So all you'd do is you'd balance it off. Your carried down will go on that side. So you'll bring it down on here and you'd do the same. So you'd have balance brought down, and you'd have, I believe that totals 2448 and 560. Your carried down would be on this side at 31st of October. So your brought down on 1st of November would be on this side. Okay, so that's going to be your debit. And in this one, you're totaling it up. Your carried down would be on this side, which means your brought down is going to be on credit side. Okay, and that is an exam, a practice exam from AAT. Okay, so if you do hours and you pass hours, you've got a good chance of passing AAT ones, because we do like to challenge you. Okay, has anybody got any questions before I love you and leave you? It's been quite a long session. Thank you so much, it seems. So, oh, that's nice. You'll be fine. Honestly, you'll be absolutely fine. But remember, I'm not going anywhere. But I do want to see you now entering for your exams. So if you are entering for your exams, please let me know. And also let me know how you get on, because I know not everybody's my student. So you know where I am if you need me. Crack on. Please don't, thank you. Eddie's mashed. Yeah, mine as well. I'm going to eat something. Yeah. Yeah, have a look. Like I say, I'm here till about 4 o'clock before I start my drive home. So please ask me questions. I do pick my emails up at weekend as well, as long as I'm not out and about. Yep. Once this is done, how do we get in touch with you? So my email address is sam.h. Hang on a minute. I wonder if I can. Alan, can you type it in? So it's sam.h@premiertraining.co.uk. So drop me an email, and then if you need me, if we need a chat or anything, there you go. My lovely assistants put it in. Okay. So if there's no more questions, I'm going to love you and leave you. Have a fantastic weekend. Please don't do too much on it today, because I do know there were a lot of information in that. And then any questions, I'll be I'm around. All right. So good luck, everybody, and get them exams booked. I'll see you all soon. No problem. Thanks, David. Take care, everybody.